To an exclusive conversation. Asset manager Brookfield Asset Management is set to acquire 50% stake in 4 Grade A commercial properties from Bharti Enterprises. Ankur Gupta, managing partner and head of real estate for Asia Pacific region, tells Shireen Bhan about the deal with Bharti and how they plan to deepen this partnership.
Well, let's talk about this transaction. And we're sitting here in the building that the deal that's just gone through with Bharti. What is that going to mean as far as the REIT holders are concerned? What kind of accretion do you see on account of this transaction?
So we launched our REIT, Brookfield India REIT, in 2021. And our story was always that from a smallish portfolio of assets, through contribution from Brookfield and creating it attractive for others, like public investors or business houses that own real estate. This can be a vehicle which will be the open source, if I may use the word, for hardware, where people can contribute their assets, take units, create liquidity in a very organized way. Today, if somebody has to sell a building, there's a finite set of investors who can buy, and it's a 0-1. You either own the building or you sell it. By doing something like this, it is demonstrating to the market how people can contribute their assets but still continue to have an ownership and a commercial interest in the sector.
Yeah, Bharti continues to hold 8.5% in the REIT post this transaction. Yeah.
So for the seller, which is the Bharti Group, has been a partner for many years now in this airport district in Delhi, and we're exploring ways to make the partnership even deeper. They continue to have an interest in a larger portfolio. So through this open source architecture that we've created, it is demonstration that other corporates and individuals can also participate in the story for us. The US commercial real estate space is $20 trillion. India is less than $500 billion right now. So there's a lot of real estate to be built and to be institutionalized. And we believe that as the largest real estate firm in the world, we have a big role to play in that space. What it means for the current unit holders is that a very sophisticated investor and owner, operator, manager, the Bharti Group, has endorsed taking units at 300 rupees a share, which is slightly below the net asset value. So on an accretion basis, it's still positive for unit holders, but it's significantly at a premium to the current spot trading price. So it shows the path for other investors that there's significant upside in our stock price of the REIT right now.
I'm going to jump in with a couple of questions. One, on your statement that you're going to deepen your partnership with Bharti. What does that mean exactly? What are we talking about? On the open source statement that you made, what else is on the horizon? Who are you talking to at this point in time? And the headroom for growth. Forget the US comparison that you gave us, because very different markets, very different size of the economy. But assuming that India continues to grow between 7 and 8%. What are we talking about in the next 5 years in terms of institutional build-out?
So every quarter, India sees more leasing than it saw the previous quarter, and that trend has continued to be very strong. I'll give an example. We built an asset in Pune recently, was built during the COVID period, was leased during the COVID period to MasterCard, one of the largest payments company in the world. It's a 1 million square foot lease that they've signed with us. That asset sits on Brookfield's private balance sheet. Assets like this will continue to be contributed to the REIT. So one is growth coming in from Brookfield's umbrella. And we are the largest owner of office space in the country right now. So that all those assets are available for the REIT over a period as we de-risk the development side of things, and the leasing has taken shape. So the growth of the REIT is coming in from two sides. One is the inherent growth in the unit value of REIT, because most of our leases are indexed to annualized growth.
Right.
There's significant headroom in mark-to-market of rentals. And then transactions such like this increase the enterprise value. When the enterprise value goes up, the size goes up, you attract more investors. As a result of that, cost of capital goes lower. Classic 101 finance. So we would love to, and we would look at every opportunity to contribute more assets to the REIT from the Brookfield stable. And a transaction like Bharti shows the path for other corporates in the country who we would love to partner with and contribute their assets and take units and then grow the business together.
You're talking about growth and you're talking about opportunities as well. I think one of the things that the market is excited about or enthused by is the possibility of you actually upping your guidance as far as new leasing is concerned, because you seem to be on track or in fact have done better than what was expected at this point in time. What's the expectation?
So we've always expected that commercial real estate coming out of the COVID pandemic had hit a rock bottom sometime last year. And the demand side continues to be very strong. People were waiting around at the gates saying, is it the right time? Are people back to work? India never really saw that complete work from home culture. Yes, there was a period of time, rightly so, when the government mandated that we should all work from home, and that helped control the bad effect of the pandemic. I think India, urbanization is a big trend in the country. In fact, I've gone on said that we need more suburbanization because our cities are getting a little bit too concentrated. But as far as the REIT is concerned today, the leasing has been, we've achieved 40% of our next 18-month guidance. And I would say that we should beat that guidance now. Two parts are important. We don't only manage for occupancy, manage for overall return, which is we have to keep making sure that our headroom rental growth that we have is also achieved, because that creates outsized returns for our investors and to our own capital. So I would assume that these assets that we have used to run at 95, 97% occupancy, and today we are in the mid-80s. So there's a 10% headroom to grow in terms of occupancy levels and a 17 to 20% headroom to grow on rentals.
Okay, and in fact, you can catch the full interview at 5:30 p.m. today only on CNBC TV 18.